Hey everyone, Longacres Finance here with the October update to the Quality Dividend Stock Portfolio. Let's start with the most important part, the performance of the portfolio. The portfolio has been started in a pretty bad time in the market. Both September and October were down months for the market. The S&P was down 4% in September, and in October it was down 2.66%. Our portfolio beat the S&P by 97 basis points in September, but October was a different picture. We lost by 1.01%, or 101 basis points. So pretty much our whole gain from September was erased in October. The cumulative return for the 2 months for the S&P is minus 6.55%. Our portfolio is down 6.59%, so we're losing by 0.04%. It's a pretty small loss, but it's still bad to be losing. Taking a look here at October, I have it broken down by each week in this time-weighted calculation. You can see the first week was a down week, then the market picked up a little bit. We were actually up in the second week, the third week was positive, fourth week it came down a little bit, and then the last week of October, the market really came down and we lost quite a bit in that last week. If this is your first time to my channel and you like the content I have here, please consider hitting the like button. It'll help promote my channel. Also, please consider subscribing for future updates. Let's take a quick look at the market returns of all the positions in the portfolio. You can see column C here is the October return for each position. Positions highlighted in green perform better than the S&P, and all the positions highlighted in pink perform poorer than the S&P. As you can see, there are more pink than green highlights, meaning that more positions underperformed the market than outperformed. The best performer was ADP. It was up 13.24% in October, which is a pretty phenomenal return. You can also see that BlackRock was up for the month, Bank of New York Mellon was up 6%, Comcast had a positive return, and Graco had a positive return. MSCI had a negative return, but it beat the S&P. Northern Trust had a slightly positive return. T. Rowe Price was down, but beat the S&P. And West Pharmaceuticals was down, but beat the S&P. The poorest performing positions were MasterCard, which was down 14.5%. Domino's Pizza was down 11%. You can see Moody's here and Visa were down 9%, and Northrop Grumman, Lowe's, Jack Henry & Associates, FDS, and Costco were all down 8%. Taking a look here at the year-to-date column, you can see that 10 stocks are currently beating the S&P since we've started, so September and October combined, and 15 stocks are performing poorer than the S&P. Our best performing stock, no surprise, is ADP. It's up 14%. It had 2 positive months, and October really pushed it ahead. The other positive positions are Comcast, also had 2 positive months, it's up 4% since we started. Graco had 2 positive months, it's up almost 7% since we started. And those are pretty much the only 3 positions that are actually positive since we've started. The poorest performing position is MasterCard. It was down in September and was down again in October, and it's down just a little bit more than 19% since we've started. Northrop Grumman is down 15%, Visa is down 14%, see Roper is down just under 13%, FactSet Data Research is also down 12.5%, so it's doing pretty bad. Fastenal is down 11%, and you can see a couple more double-digit losses here, Jack Henry, Moody's, Microsoft. So we've picked kind of a bad time to start our portfolio, but the one upside of the market being down is the more money we put in here, we can buy a lot of these positions for lower cost. So when the market picks up, we'll gain some money. So let's jump over here and take a look at the returns side by side. So this is the time-weighted rate of return for the Quality Dividend Stock Portfolio next to the S&P Total Return. So you can see we beat in September and we lost October, and overall we're down by 4 basis points. And here is the equal allocation. So our portfolio has actually beaten the equal allocation both in September and in October, and we're up 23 basis points on the equal allocation. Let's jump over and take a look at the holdings. So these are our holdings for October. The positions were worth $200.29. We had 40 cents in earned dividends. The total net cash flow into the portfolio was $211.96. So the total account value was $200.69. Here you can see all the positions listed. They're sorted by when they pay their dividend. These are the Schedule A, so January, April, July, and October. Schedule B is February, May, August, November. And Schedule C is March, June, September, and December. Here you can see their annual dividends, the number of shares that are currently held in the portfolio, the annual dividend that is expected from this amount of shares, and the quarterly dividend that's expected from this amount of shares. The new column here compares the quarterly dividend from the prior month to this month, and I've noted any increases in green. So you can see almost all of our positions have increased their dividend based on the contributions that have been added into the portfolio. So you can see the highest increase was from Northern Trust, up 3 cents compared to the 4 cents we were getting in September. Now we're getting 7 cents each quarter from Northern Trust, or we're expecting to get 7 cents from Northern Trust each quarter. So going into November, which is a Schedule B month, based on these holdings, we would expect to get 26 cents. Of course, we might get a little bit less depending on when these positions were bought. Might have missed the next date with some of these contributions, so we might get a little bit less than 26 cents. Down here you can see our current yield on the portfolio is 1.61%. That's based on our expected annual dividend of $3.24 compared to the market value of the portfolio. And here you can see our yield on cost is 1.53. That's compared to our net cash flow into the portfolio. As you can see here, I have Visa's dividend highlighted because in October, Visa announced a dividend increase of 6.7%. They upped their quarterly dividend from 30 cents to 32 cents. In respect to this portfolio, it didn't really affect our quarterly dividend that we're expecting to get because our position is very low. Normally, an increase in the dividends would flow through and we would be expecting to get a higher payout amount. Here you can see a little summary of the dividend growth. So from increases, our dividend growth was nothing. Even though Visa raised their dividend, it didn't really increase our annual dividend. And from our contributions, so money that was invested into the portfolio, our annual dividend has increased by $1.24, which is a 62% increase over September's dividend, which was $2. So let's jump over and take a quick look at the dividends that we've received. So in September, we received a total of 9 cents, and in October, we received a total of 11 cents. So you can see on the chart here, we've jumped up 2 cents from September to October, and we've started our quarter 4 with the 11 cents in October, and November and December are going to make quarter 4 look a lot bigger than quarter 3. But of course, quarter 3 only included September, and we missed out on July and August. So the quarterly growth will really be better viewed when we compare quarter 1 of 2021 to quarter 4 of 2020. So let's jump over to M1 Finance so I can show you what my portfolio actually looks like for anybody interested to see what their brokerage account looks like. So this is the M1 Finance Quality Dividend Stock Portfolio. You can see the main page here. I've got it filtered for the 1-month return. So you can see for October, the portfolio using the money weighted rate of return was down almost 5%. So we lost about $8.41. That's made up of a market loss of 8.66 and earned dividends of 25 cents. Scrolling down here, we can see all of our slices sorted by value. You can see the highest value we have right now is in Roper, and the lowest value is at Home Depot. So let's sort these by return here, and let's see which one has done the best. So our best returning stock so far has been ADP. It's up 13.46% since we've invested. BlackRock is also positive, and Costco is also barely positive, and the rest of the stocks are down. You can see Graco is pretty close to breaking even. Northern Trust is down a little bit, and it starts to veer off as we go down the list. The worst stock right now is MasterCard, which is down almost 17% since we've invested. Quite a big of a difference between Visa, which is down just under 11%. Let's take a quick look at the dividend activity here. Let me just filter out for dividends. So you can see the October activity, we received 5 dividends. We got 3 cents from ADP, 3 cents from Northern Trust, 1 cent from Intuit, 1 cent from Roper, and 3 cents from Comcast, for a total of 11 cents in October. That's it. Thanks for watching the video. Please subscribe to my channel for more videos.